Back in the 1970s, a series of energy crises sapped growth and lifted prices gave rise to global stagflation. What is stagflation? It is a combination of slow economic growth or economic stagnation and inflation. While the reasons leading to it may be different, the current economic outlook is not. Two of the world's biggest economies, the United States and China, are struggling. Millions in America are living on the edge. They are struggling amid historically high inflation. Food prices have shot up. Oil has become expensive. The cost of energy has jumped 41.6% in the last year. And the trend continues to move in the wrong direction. The Consumer Price Index, that's a gauge of inflation, jumped to 9.1% in June from a year earlier. This was the largest jump since 1981. The US GDP shrank at a 1.6% annual rate in the first quarter. According to Reuters, a report later this week is expected to show a gain of just 0.4% in the second quarter. Some even predict the GDP hitting the same number as quarter one. And by one common rule of thumb, 2 quarters of negative GDP growth would mean the US is already in a recession. However, US President Joe Biden announced that he does not expect the US to suffer an economic downturn. He says, in his view, America is not going to be in a recession.
We're not going to be in a recession, in my view. The employment rate is still one of the lowest we've had in history. It's in the 3.6 area. We still find ourselves with people investing. My hope is we go from this rapid growth to steady growth.
The U.S. Treasury Secretary Janet Yellen also says U.S. economic growth is slowing and acknowledged the risk of a recession. But she says a downturn was not inevitable. While both Biden and Yellen downplay a recession risk, the numbers clearly show that the U.S. economy is at least teetering on a recession. In fact, economists say the U.S. economy will likely fall into a mild recession by the end of this year, as the Federal Reserve raises rates to tame the prices. Let's now focus on the world's second largest economy, China. The dragon is in troubled waters. Its economy is riddled with not one, not two, but multiple crises. A wave of mortgage boycotts is roiling the property market. A rural banking crisis is brewing. The consumer demand is sluggish. And the government is yet to fully call off its disruptive zero-COVID strategy. The economy is not looking encouraging. China's GDP barely grew in the second quarter. While COVID-19 lockdowns continued to stifle growth, it expanded only 0.4% year-on-year between April and June. The economy grew at the slowest pace since the start of the pandemic. The quarter two figures were well below the market expectations. It comes amid rising recession fears around the world. China's banking crisis could also soon explode. The crisis started in April when rural banks in and around Henan province froze accounts of the customers. They were restricted from withdrawing their own money. How much money did the banks freeze? Over 39 billion yuan, that's almost $6 billion. This triggered several protests. One of the biggest ones was on the 10th of July when over 1,000 angry customers lined up outside one of the banks demanding that their money be returned. A probe finds that a private investment group in Henan had been siphoning off deposits from small banks, which blew up into a major crisis. The debt-laden property market also is adding to the economic downturn. There is a debt pile of $300 billion, which was unleashed by real estate developer Evergrande. The real estate sector contributes over 25% to the Chinese GDP, and the Evergrande crisis is now sinking the entire country. Major economies across the world fear that a slowdown in the biggest economies, the US and China, could spill over quickly. Will recession soon be a reality for the world? That remains to be seen. But what experts say is that if recession is on the horizon, it won't be like anything we have seen before. And for more insights on the broadcast, with me is Sultan Meghji, professor at Duke University and former Chief Innovation Officer at Federal Deposit Insurance Corp. He's with us from New York. Thanks very much for being here on the broadcast. What is your assessment of the current situation in the US and China?
Well, good evening, Molly. Thanks for having me on. And I think you've done an amazing summary laying out the facts. And, you know, the top three things that I'm thinking about right now is, number one, is it a recession this week or is it a recession in the next quarter here in the United States? I don't think it's a question of if, but when. And then the second question related to that is how bad is it? You know, the Federal Reserve is preparing those of us in this universe to talk about it as a mild recession. I think that's potentially optimistic. The second thing is this considerable downturn and pressures on the Chinese economy, whether it's related to COVID or it's linked to Russia and its invasion in Ukraine and global supply chain concerns, which are still becoming, you know, quite a big issue. And then third is the ripple effects of both of those. We've never seen a situation where the two largest economies are both so inexorably linked as the Chinese and American economies are, but that also causes such a ripple across the rest of the world. I don't look to next year to be calmer in any way. I just really do hope that we get to a situation where the ripples aren't worse than what's actually happening. The other two concerns that I would highlight is, first, the U.S. elections, the midterm elections coming up here in the very near future, are really slowing down a lot of the normal actions that you would see in the United States and New York and Washington in terms of policies that the Federal Reserve, the U.S. government, and the U.S. Congress could potentially do to alleviate some of these. And then the second is, you know, population data coming out of China. You know, the Chinese median age is now older than the median age in the United States. There, in both situations, you have a smaller population of younger people who make up the majority of the workforce. You have a smaller population of people getting advanced degrees, especially in STEM. And all of a sudden, there's now an incredible pressure to find workers in both countries. And in China in particular, they are very fragile as it relates to their workforce, as we've seen with the global supply chain disruptions because of their zero COVID policy. This is all coming at the same time. And again, we've never seen anything like this.
Right. Major economies around the world fear that a slowdown in the US and China could spill over quickly. So is a recession on the horizon is the immediate question that arises. And what can governments around the world do at this point?
Oh, that's a fantastic question. You know, we should spend 2 hours talking about it. My personal opinion is that we have a very limited window to alleviate recessions in the United States and China, and that window is closing incredibly rapidly. You know, something like the next couple of weeks, couple of months. If that happens, I do think a global slowdown is inevitable. There's just no way to decouple those. If I was sitting in a central bank in India or in the EU or in Africa or South America, I would specifically be looking for ways to bolster domestic production of goods and especially food that are traditionally coming from other parts of the world. Agricultural disruptions in Europe are going to become a bigger topic as we go into the latter part of this year. I think in India, there's a tremendous opportunity to take advantage of this. You know, India is an absolutely fantastic modern economy that has the opportunity to pick up a lot of the slack. And so I would hope that the leaders of India, you know, do take advantage of this, you know, especially as it relates to advanced technologies and energy production and food production. These are all areas where India is incredibly well positioned to not just, you know, help itself through a potential recession, but also help the rest of the world and get a little bit more decentralized instead of this highly centralized supply chain through the United States and China.
Sultan Meghji, appreciate very much your joining us on the broadcast and sharing those insights.
Thank you for having me.
WION now available in your country. Download the app now. Get all the news on the move.